Experience the most efficient system for delivering sulfur and phosphate to meet your crop's needs with Smart Nutrition MAP plus MST.
Let's talk about what's going on in the cattle markets. It's time for a beef market update with Wasko of the Gateway Livestock Exchange. And it is great to chat with you.
Good day, Shaun. Good to be here.
Yeah. Okay. Let's start looking south of the border. What's going on in the U.S. price-wise?
Well, good week in the U.S. on fat cattle. In the south, 1 to 2 higher. So Texas and Kansas, 184 to 185 trade this week. In the north, on the live market, a couple bucks higher in Nebraska, 186 to 187. And dressed, they were 294 delivered, so that's 2 to 4 higher. So a good market. So 2 weeks, last week market was up a bit. So it feels like the market's gaining some ground here, coming off of our early September lows. So again, be great to see another week, but this has been a good week to kind of solidify that trend. Now the cutout, that choice cutout, the wholesale market we talk about, it's still struggling big time. But again, like Lindsay and I talked about 2 weeks ago, not a surprise from a timing perspective. The choice cutout closed last night at 296. That is $3 lower than last week. And the select is sitting about 14 bucks back. So that is what it is. As we, get into the middle of October, we'll be expecting to see that kind of start to make its seasonal move higher as folks get things lined up for U.S. Thanksgiving and the holidays beyond. But we're still ahead of that time frame. Locally, Shaun, I don't have a lot of concrete stuff to give you for Alberta. Slow trade to get going here. I think cattle feeders are seeing the higher money in the south, and they're getting steady bids from our local packers, which has been in that 405 to 407 delivered dress. So we'll see how the dust settles later today in terms of do we get some trade done or not. The one thing I just wanted to mention, a week ago, we had a U.S. cattle on feed report. They came in for September 1 with numbers up 1% from last year. And their placements in August were down 1%, marketings were down 4%. So when you look at that and you go, wow, they still got more cattle on feed than a year ago, and then you compare it to that to what's the report that Canfax has been giving us for Western Canada, and we continue to see our on-feed numbers here drop versus year ago numbers. And, even the placement numbers, year to date, the Americans have placed 2% less cattle on feed for the entire 2024 so far. And we're down 6%. So you just continue to see that little bit of deviation between the two reports and the two markets. And I think it all goes back to the numbers, obviously.
Why are U.S. packers a little stronger in terms of the prices relative to what's going on here in the Canadian market?
Well, I think first of all, the supply, especially in the south, has tightened, especially in Kansas, and that's the one area that we see the numbers dropping off. Placements have dropped off dramatically in Kansas in 24. So you see tighter supply starting to show up, and that was expected as we moved along here. So it's nice to see this happening. So it's a supply situation then, and of course, I don't think as the packer gets closer to that demand period that he wants to get caught short either. So yeah, he's going to certainly be trying to push this cutout to get his margin back into the black because with the cutout at 296, it's not profitable. But he knows what lies ahead in terms of the fourth quarter and demand.
Yeah, all in all, though, continued strong prices. Now,
oh, yeah.
Do you remember a time in your career where you've been able to talk with this much longevity about this, these strong of prices for over such a given period of time?
And I was thinking about that earlier, and we'll talk about the cow market in a second, and there's a great example. But just for this length of time, well, first of all, last year we were talking about record cattle prices, right? 23 was a record. And that was coming off of the highs from 2014-15. So that was the first time we'd broken those levels. And now we've been here talking about these levels. And yeah, I get the cost structure is different. Costs are up. We've had lots of weather issues. I'm not saying that there isn't any concerns out there, but strictly from sitting in a market analyst chair and talking about cattle prices, I have never, myself witnessed in my 40-year career, prices at record levels for this length of time. So yeah, it's just, I guess I'm kind of basking in the glory right now.
Well, there's reasons to smile. That's good. Now, prices, like we just talked about elevated prices, profitability. We've been talking about a lot of profit, lack of profitability in the cropping sector. How does it look in the cattle side of the equation?
Well, certainly each sector is going to be different. From a cycle perspective, this is when the cow-calf operator shines. So in terms of fall marketings last year, he would have been certainly profitable, and that would be our expectation, especially with lower feed costs and some good feed production this year. We'll be looking at another really good year in terms of the cow-calf producer. So, but again, we know that this is when he has to shine because the cycle will carry on and there'll be the next phase. So that's a cyclical discussion. I think from the cattle feeder perspective, it really depends. And I know that's easy to say, but it depends on when the cattle were bought. Did you get an opportunity to lay off some risk? And in those situations, that could be a pretty good story. Generally speaking, on spot cattle, cash to cash, the report that Canfax puts out, it's been a pretty good year, 2024. We started off with some struggles early in 24, January, February, March. The first quarter was the struggle in terms of feedlot profitability, just on that spot measurement. But really since then, the numbers have narrowed drastically in the last month. We're back to just over break even. And we'll see as we go into the fourth quarter. Can this market rally to keep feedlots, in the break-even scenario? So lots to watch for. But it's been a good year, Shaun.
Yeah, it's similar to the cropping side. When you bought your fertilizer has a big impact, and what prices, all that kind of stuff. Similar here from a feeding perspective. Are you fully naked and you're just running in the spot on inputs and on selling, or have you hedged a portion of it or all of it, or what does that look like? It's going to spit it a little bit different. You mentioned cow slaughter. We got to get to that.
Yeah, I did want to talk about this because as we head into the fourth quarter, that's typically when their big production increases happen for non-fed or cow slaughter. So year to date, so far this year, Shaun, our cow slaughter in Canada is down 16%. We've been well off of last year's pace really since April. Now, we have to add cow exports into that because we do export a lot of cows, and our cow exports are up 16%. So when you level those two pieces out, our marketings are down 10% year to date. So that's a pretty big drop off of where we've been for cow marketings. Remember, we've come off these dry years. Cows go to town in those dry years. So that's not the case so far. We'll watch and see. We've got slaughter cow prices, even though they're off of their August highs, still at, say, 184 was the Canfax average last week on D2. That's still $50 $100 higher than the same time last year. And
Wow.
Last year, Shaun, it was a record high for that week. So These cow prices, will that be enough to incentivize more to come to town? Or does that, if she's carrying a calf, that opportunity to reap some more profit with another calf is going to be forefront of mind as well.
Yeah. Wow. Steak sandwiches and hamburger for everybody. That's
Yep.
interesting.
Bring it on.
Hey, let's finish up with fall run volume. The weather playing a factor here, and the fact that we're kind of off to a bit of a slow start, relatively speaking.
Yeah, it's been a slow start. Well, it's been slow all through the summer, obviously, compared to the last few years. But even on the spot auction market volumes, they're running well off. Now we've had a lot of forward calves sell in the last couple of weeks, but of course they won't get delivered till October and November was basically all their delivery dates. But in terms of spot volumes through markets, we are running below last year. But again, what were we, 32 degrees here in Southwest Saskatchewan 2 days ago? It just hasn't felt like fall, but it will turn and change. But I do think with these great conditions, these great grass conditions, some late moisture, producers have using the time to make those decisions in terms of their marketing plans. So we'll see that change. It's fourth quarter next week, and it's going to get busy, but it's been a slow September compared to last year.
Yeah, and do we catch up? Does November and December just make up for the slow September? There's a lot of questions and a lot of decisions that produce at the ranching level in terms of, okay, I've got feed. Do I hold? Do I, maybe we deter from our typical marketing plan because there's a little bit bigger pot of gold at the end of the rainbow, so to speak. And if we constrict supply, do we see prices go up enough where people reconsider that pot of gold? Yeah, there's a lot of things to happen, and that's why we talk to you every 2 weeks and to keep us up to date on all of it. Thanks so much. Have yourself a great weekend.
Okay, you too. Thanks, Shaun.